Alright guys, so let's start today. I want to talk about GME, I want to talk about QQQ, I want to talk quickly about Lucid as well. So let's get into it. So I'm gonna start with GME. Yesterday I talked about AMC, I talked about SPY, and I talked about the crypto market. So guys, go watch this video if you haven't seen it. It's very interesting. I'm explaining why I believe a correction is about to happen and what would be the impact on AMC. Right now I'm gonna do a bit the same thing but with GME, and I'm gonna use QQQ, which is the Nasdaq 100 ETF. So it's a good tracker of the global market, of the tech sector especially. So first, let's do some basic TA, basic technical analysis on GME. So we have here, guys, this huge triangle. You have seen this triangle for some time. Bam, let me get rid of that. What happened here, guys? What happened is that we all got fucked. I'm sorry for the language, but this is what happened. We got fucked, guys. Here not really, because this is not really a fake out. We didn't close above. This is a pure fake out, guys. After consolidation, we had all the signals and still the market didn't manage to go higher. Also because there was some issues in the global market. So it's not a full GME fake out, but I mean, it's not looking good. But what you need to remember, guys, here is that whenever you have those fake outs, usually you have a breakout. Okay, so not a fake out in the opposite direction. This is what happened here. We faked out and then we broke out on the downside. This is a real breakout, retested, as you guys can see, typical triangle breakout. We come here, find some support at the previous lows. So it could have been higher, it could have been here, but whatever. We found support here, we rebounded. Bam, this is my 160 level, important level. And then we went lower. So what can we expect? Whenever those triangles are broken, just like for AMC, we can expect a correction that lasts between 1/3 and one full triangle. So 1/3 of this triangle, guys, is already 2-3 months. So we are only 1.5 months in this correction. And the usual patterns we see are ABCs or WXY. It can be either ABCs going deeper, doing a 5-3-5 wave counting, and WXY corrections are doing sideways corrections. So something like this, okay? This would be a WXY, and this would be, unfortunately, an ABC, okay? So right now we did the A or the W. It doesn't really matter. W wave should have 3 waves. A wave should have 5. I don't know how many you count here. You can rather 3, 1, 2, 3, A, B, C, but maybe the A wave is not complete. You know, maybe this is the A wave. All right, so it doesn't really matter. What matters is that we are in a corrective pattern that should last 2-3 months. Okay, let's quickly analyze what happened after the NFT news about GME getting involved in the NFT market. Guys, I was shocked. I mean, I was posting my daily recap on GME like I do every day. And when I posted it, I saw the post market going higher. And I was like, what is that? And I still don't fully understand what happened here. So basically, if we zoom on the 1 hour time frame, we had this crazy move that happened on Thursday post market after the news, and that went to 170. So what can it be? This is a low liquidity period, and if the price goes up that strongly, it means that there are big sizes. Who is trading big sizes? It can be asset managers. It's not retail. The retail didn't come after market buying like that, all right? So it's some, I think, institutional clients or hedges. If we're talking about hedges, it means they would have covered a short position because those guys are short. Why would have they done that during the post market when they know there is a scarce liquidity and that they will, of course, get a bad level? I don't think this is the way they do things, but maybe it's what we call a fat finger. So, you know, the guy wanted to do a smaller position. He did a bigger position and he didn't get executed before the close. So he just moved the market after the close. It's possible as well. Maybe it's some people that got late for the close. You know, those guys, they usually trade before the close when the liquidity is there because they don't want to disturb the market. So whatever it is probably a mistake done by a professional investor, such as an asset manager or a hedge funds. Maybe it's some hedge funds, like I said, that covered some margin calls, but once again, they would have probably kept buying the day after, and the price didn't hold. So how can we interpret this? Not good, guys. 160 was the level to break. we didn't manage, as you can see on the daily time frame, to get above that. 160.3 is the maximum level we saw. This is a level that is pretty obvious, guys. I mean, I think that no one that is doing technical analysis has missed that level. It's very obvious, and this is the level we need to break for bulls to take back control on the short term. We didn't, and we got severely rejected. That's bearish, all right? So we are bearish, guys, on the medium term, and we can expect, unfortunately, the price action to go maybe lower or maybe just sideways. So if we go lower, I'm going to show you guys the analysis on the QQQ that is going to help us. But first, ABC pattern. We have the A wave. I think it's complete. We completed the B wave, so we are doing a C wave. So for C waves, guys, you use field projections, you measure A wave, you apply it to the top of the B wave, and you check the 1-to-1, 1 to 0.618. The most common one is 1 to 0.618 and 1-to-1. Here, the 0.618 is going to 85, okay? And we have some support at 85. So double reason to believe that if we have a C wave, it would go to 85. Now, the 1 to 0.382 is also a level. And as you can see, guys, it's funny to see that those levels, you know, okay, let's do it perfectly. It's not perfect, but you know, those levels, they're coming, you know, very surprisingly to some support levels, 85, 115. So those are the levels to watch. Either we go to 115, either we go to 85. This is what we can expect, unfortunately, for the coming weeks. After that, of course, guys, a strong rebound. Why? Because we've seen, guys, how these two stocks, AMC, GameStop, are able to rebound strongly whenever there is just a small news that investors are just cheering for. Now, what is going to tell us if we go to 85 or if we're going to be able to go sideways? It's the global market. If the global market is crashing like 10-15%, which is, once again, go check the video I did yesterday, unfortunately going to happen, I think, within a week or maybe 3 months. I don't exactly know the timing, but it's going to happen. I think GME and AMC would go to, you know, 15 and 85 before strong rebound. So let's just be prepared for that. And now the analysis I'm going to do on QQQ, guys. So QQQ is the Nasdaq 100 ETF. So basically it's a good indicator of the global market. Look, guys, the very healthy trend that we had. How do you know if a trend is healthy? You check if you have hidden divergences. What is a hidden divergence? Is whenever the market is making higher lows, yes, so basically going higher, all right? So whenever you see an uptrend, you just check if the market is breathing enough. So what does it mean to breathe? It means that the momentum is making lower lows, all right? So we go back, the momentum is the energy, we go back, take some energy so that we can push higher. This is a healthy trend. Whenever the trend is healthy, the trend is likely to continue, and we have those continuation breakout. Okay, now we had this for 1.5 years. Look what we have right now. Since October 21, do you see the MACD going lower? Do you see it, guys? You know, look here. Each time we had those, bam, here, lower low connection on the trend line, lower low connection of on the trend line, lower low connection on the trend line, so on and so forth. And now connection on the trend line, but higher low. So we don't have the hidden bullish divergence anymore. Does it mean that we're going to break out on the downside? No, but the probability is, of course, higher. Second thing that makes me believe that we're going to break it soon is that, guys, you remember what we saw in GME? Whenever we have a fake out on the upside, then usually we have a downside breakout. Look what happened here, guys. We had a fake out here on the upside. Many investors, myself included, got caught here. I bought some shares about many different things here, and, you know, I just got hanged here on those trades. So I lost money. So, you know, I feel like, you know, you don't feel good. So whenever this happens, usually you have a fake out on the downside. I personally took a bearish position on the global market to protect my investment on the SPY around 1% higher. So not that much higher. And because I'm afraid that this time we don't hold on 380. So guys, the level to watch is 380. If we break that, okay, what can happen? Maybe we're gonna find some support here and then rebound, but then we're gonna go lower. Tag. Okay, and here, guys, I'm gonna be here to take a bearish position to protect my investment. And what I'm gonna do after that, I'm gonna reload on GME and AMC at the levels I showed you, because if the global market is correcting, we're gonna go there. Then the hedges, they're gonna need to face some margin requirements because they lose money. They're gonna cut something that is consuming a lot of margin. AMC short, GME short. So this is, I think, having a good strategy that I'm personally gonna put in place. So that's it for today. I hope you guys enjoyed this video, and if you did, please don't forget to click on the sub, like, and bell button so you're gonna be the first to know when I upload anything new. And stay close to shore. I'll see you guys.